All right, before we get started, I want to see who's been paying attention or who's up to speed with their current affairs. Who knows which Springbok coach, former Springbok coach, has joined the political scene today? Yeah, Peter de Villiers. And who's he joined? The Good Party, yeah, with Patricia de Lille. So quite an interesting combination of people there. And, well, I wonder if he'll be better at politics than he was as a Springbok rugby coach. Although, to be fair, he wasn't that bad, actually. I was just looking at his record as a Springbok coach while we were sitting at the back there. And he actually, we as the Springboks, we did win more games than we lost under Peter de Villiers' leadership. But I think it's largely his comments in the media that probably got him a little bit of a tarnished reputation. But anyway, that's just an aside to see who was paying attention and to inform those of you who didn't perhaps know that already. Right. My brief today really is to talk to you about the election and what it could mean from a financial markets perspective and what the markets are expecting. Now, obviously, on the panel discussion here, I've already given you a fair amount of idea of where I'm going with this. But bear with me as I go through the slides and try and explain it and what the possible scenarios are and what I believe the most likely scenario is in terms of how the markets may react to the up-and-coming election and the results that follow. So first of all, let's just try and sketch the landscape in terms of where we are right now. We know that Cyril Ramaphosa has now been in office as president of the country for the last 14 months. He has basically been filling the shoes of Jacob Zuma for the last 14 months as he sits out the remainder of what would have been Jacob Zuma's term in office. So this will be the first official election where Cyril actually gets voted into and given the mandate by the people, by the nation, potentially to then have the role as president for the next 5 years. He's been walking a very difficult tightrope within the ANC over this time. And we know this. We know that there's the two factions. There's the Zuma faction, which seems to now have Ace Magashule as its figurehead. And then, of course, there's the Cyril Ramaphosa faction. And he's been trying to navigate this and walk a delicate tightrope between these two factions of the ANC. And he's had to do that very, very carefully. And there has been some level of public criticism at the fact that some of, it's been too slow. Like Ranjeni said, he needs a firecracker up his bum sometimes to, do more. And I think that's what the public is very much wanting. But we also need to take a step back and say, just hang on a second. Let's look at what he has accomplished in the last 14 months. And he's accomplished quite a bit. Look at the changes that we've seen in the various ministries. We've now got a couple of very competent ministers, well-regarded ministers in very important key posts. We've got Pravin Gordhan back in the fold at Public Enterprises. We've got Tito Mboweni in the Ministry of Finance. And a lot of the questionable leadership has to some extent been sidelined or been pushed into ministries which are of less significance. So we've got that. We've got the various different commissions that have been unraveling around us. And of course it's been difficult. We all are probably punch drunk from listening to what's been happening over the last 5 years, particularly of the Zuma administration, listening to the Zondo Commission, seeing what's been happening at the PIC inquiry. But the reality is that this is a cleaning out of the system. It's a process that we have to go through. We've got a new National Director of Public Prosecutions, someone with a very high pedigree. We don't have Sean the Sheep anymore, right? So all of these things are, I believe, very positive, and it does show that Cyril Ramaphosa has been doing a lot in the 14 months that he's been in office, and we need to give him credit for that. And he certainly does appear to be steering the ship in the right direction, but also understand that he's been doing this whilst also having to walk this very delicate tightrope within the ANC to try and keep the organization unified and try and navigate the two factions within the ANC. Whilst all this has been happening, of course, we've been through a recession in South Africa. Last year, we saw 2 consecutive quarters of negative economic growth, and that is a hangover from the Zuma years. And we continue to live with this hangover. I mean, all the economic forecasts looking out to 2020 and even 2021 are not wildly optimistic. We're looking at growth of 1 to maybe 1.5%. In the most ambitious scenarios, maybe up to 1.8% GDP growth. So it's not good enough, and this is still very much a relic and part of the hangover of the Jacob Zuma administration that we still live with today. And as a result of that, we've seen that foreign investors have largely shunned the South African financial markets, particularly the JSE. And I'll show you a slide in a little while towards the end of my presentation that gives you a very clear illustration of just how foreign investors have basically walked away and left the JSE and have been vacant in our market. But that has also left our asset prices trading at quite a discount to our emerging market peers. And potentially therein lies the opportunity if we do start to see some foreign investor confidence return to the market, and not only foreign investor confidence, local investors as well, that could then bring some money back into the financial markets, which then could serve to try and assist and boost asset prices. So we sit with the situation where in 6 days' time we've got a national election, and this is really a big opportunity. I mean, it's been widely publicized that this is the biggest election or the most important election for the country since 1994. And I go along with that. What it is, it's an opportunity for the nation to effectively give Cyril Ramaphosa a 5-year term in office with the potential of another 5 years thereafter. Obviously, the people will come in and vote for the party, but it's largely being deemed that a vote for the ANC, a vote for a majority ANC win, would be a thumbs up to give Cyril Ramaphosa the platform that he needs to be able to then continue rolling out his anti-corruption mandate, rolling out a pro-growth mandate. We've seen his intentions to try and attract $100 billion of foreign investment capital into the country over the next 5 years. And he's already been making some strides in that respect. The most recent number that I saw is that I think he's secured about 290 billion rand worth of foreign investment, which, if my maths is right, what's that, about 20 odd billion dollars. So he's a fifth of the way towards achieving that goal. And if he's given the mandate by the people to come along to continue with his growth mandate, I think that could very much bring foreign investor confidence back to the fold. Of course, it's also an opportunity for him to appoint his own uncompromised cabinet. He's already done that to some extent, but there's certainly still room for improvement. There's a couple of ministers in various ministries which I think we could do without. And giving Cyril Ramaphosa the mandate to lead for another 5 years would give him that ability to then appoint and to still improve his cabinet with uncompromised individuals. Obviously, I've spoken about the pro-growth agenda and the anti-corruption agenda. And the real summary or the key to this is it would give us an opportunity to enable some investor confidence to return to the markets. And I think that is really what financial markets are craving. And you've seen plenty of headlines to this extent over the past week. I've got a couple of them in a few slides' time, which really just shows that the markets, the financial markets, are really just craving the certainty that they can start to actually look beyond the past and look to the future with a brighter outlook and better leadership. So in terms of the scenarios of what markets seem to be looking towards, these are the numbers that I've come up with. And as I said in the panel discussion, I mean, these are not scientific. These are my reading, looking at the various different polls that have been published out there. Obviously, we've heard about the poll from the Institute of Race Relations today from Garth. There's also, of course, an Ipsos poll, which is out there and has been widely publicized in the media, which it polls stronger towards the ANC. So trying to put all the information together that I've seen out there, to me this seems like the scenario that we're looking at. A bearish scenario for the markets would be where the ANC gets 52% or less. I think that would be a bit of a disappointment. A more likely scenario, and what really I think is my base case, is that the ANC comes out with somewhere between 53% and 58%. I think that is a fairly likely possibility. And then a more bullish scenario is if the ANC gets 58% or above, because effectively that would then be giving Cyril an even bigger thumbs up and a stronger platform from which to lead in the next 5 years. I focus specifically on the ANC numbers here because, quite honestly, I think the opposition parties, the smaller parties, are of less significance in terms of what the markets are wanting to see. The financial markets really want to see how does the ANC fare in this election, and do we have a majority party that can then lead for another 5 years, and that we're basically not going to enter into an era of coalition party politics at a national level. So quickly to unpack each of the different scenarios here, what would they look like and how would the financial markets potentially respond to each of these? First of all, the bearish scenario. Under this scenario, what I think would be likely is that you would see the rand probably weaken. It would probably move somewhere towards 15 rand to the US dollar. Currently, we're sitting at about 14 rand 40 to the dollar this morning. So that would imply rand weakness of about 4, maybe 5% in that sort of situation. Bond yields would rise. Remember that bond yields and bond prices move opposite to one another. So when you get rising bond yields, it implies that bond prices are falling. It would mean that there would effectively be selling in the bond market. So that would be a possibility. We would probably then see South Africa Inc. domestic stocks underperform in that situation. And I'm talking specifically now about the banking stocks, the financial stocks, the retailers, and some of the domestically focused industrial counters. There's already been a little bit of an uplift in some of those sectors of the market. We've seen the financials ticking higher, the banks have been ticking higher, and a lot of these stocks in these sectors are right on the cusp of potentially breaking out from a technical perspective, breaking out and making bullish breaks. And I'll show you some of those charts in a few moments. So the market, I think, is already almost, it feels like it's on the start line, waiting for some sort of positive result to then get a little bit more fired up, looking beyond the election next week. In this case, in the bearish scenario, your dual-listed rand hedge stocks would rise, and I'm talking there about the likes of British American Tobacco, Richemont, Naspers, BHP, Billiton, and a handful of others. Effectively, stocks that are dual-listed on other exchanges, where the price is made offshore, and the local currency price on the JSE is really just a function of the offshore price multiplied by the exchange rate. You would potentially get an uplift in those stocks purely on the back of a weaker rand in this kind of a scenario. And then the last point there is that your listed property counters would suffer. You'll find that listed property shares very much tend to track the way the bond market moves. And if you're going to find weakness in the bond market, i.e. bond yields rising, then you would most likely see that being coupled with weakness in the listed property market. So that's in the bearish scenario, and I attach a relatively low scenario, a relatively low probability to this outcome. The neutral scenario is more what I think is more my base case, and I think this is very much where the markets are positioned for what we'll probably get next week in the election, where the ANC comes out with a majority of somewhere between 53% and 58%. Under that situation, I do think you get a little bit of a knee-jerk reaction, positive knee-jerk reaction in the rand, and ultimately we'd probably see the rand tending towards 14 rand to the US dollar, possibly a little bit firmer over time. Bond yields would move lower in that case, implying some level of buying into our bond market, because remember, if bond yields move lower, that means bond prices are rising, so that would be a bullish move in the bond market. Your South Africa Inc. stocks would probably move modestly higher in that situation. Like I said, many of these stocks have already begun to move higher in expectation that we might get some sort of a positive outcome and some certainty looking forward. So I think there's potentially legs for some of the domestic stocks to still move higher in that situation. Your dual-listed rand hedge stocks in this case would probably lag, and that would be on the back of a firmer rand. So that, again, I'm talking about the likes of Richemont, British American Tobacco, Naspers, etc. If you get a stronger rand, then you would probably find that your rand hedge stocks would lag in that situation. And then lastly, your listed property counters would probably move higher in this sort of situation, in line with a firmer bond market. Then the bullish scenario, and this is where the ANC potentially gets 58% or more. In this case, I think you see the rand moving quite a bit stronger. Over time, I see it moving towards 13 Rand 50 to the US dollar. 13.50, by the way, is more or less where fair value is anyway. So at the current levels, the rand of around about 14.40 where we are now slightly undervalues the rand. Fair value is more around 13.50. And I think in this bullish scenario, you'd see the rand moving more towards its fair value, which is around about 13.50 over time. Bond yields would move sharply lower, implying a bullish move higher in bond prices. Your domestic stocks would move higher in this case. You'll see banks doing well, you'll see retailers performing quite nicely, and your domestic industrial stocks would perform nicely in this scenario. Your dual listed rand hedge shares in this scenario would probably lag quite a bit, again because of the strengthening in the rand. A rand moving from where it is now at 14.40 down towards 13.50, that's quite a big move in percentage terms, and that would certainly serve to weigh on your dual listed currency sensitive stocks if we got this type of an outcome. And then lastly, your listed property stocks would move higher in this case, and that would be very much in line with a move firmer in the bond market. All right, so there's no shortage of expectant headlines. These are just a couple of headlines that I managed to pull off the internet this week. You've seen Fin24 on Tuesday published a UBS report which has been quite widely circulated. UBS bets on Ramaphoria, says that strong ANC could trigger a rally for SA assets. And in that report, they basically came up with 20 stocks that you'd want to own in a Ramaphoria round 2 type of scenario. Bloomberg published an article, The Man Who Would Remake South Africa, very bullish article about Cyril Ramaphosa and the possibilities for the markets looking forward. And then Biz News published an article, Ramaphosa woos voters back to the ANC as he starts to fix South Africa. These are just 3 of the headlines of amongst many that I've seen out there, where it shows that the market is actually quite expectant that we're going to see some sort of a positive outcome here. That's the base case. So of course, if we didn't get that, if we did get the bearish outcome, the markets would probably see that would be the shock outcome. But my base case, as I say, is I think that we see the neutral to slightly bullish scenario here with an ANC majority next week. Now, the question that I really want to ask, and I suppose I've laid the groundwork for it with the slides that I've already presented to you, is will a positive election outcome allow for a Ramaphoria round 2 type of scenario? So now these are weekly charts of some of the JSE sectors which illustrate how the market performed last year when Cyril Ramaphosa won the ANC leadership and he was appointed president of the country. This is the financial index, and you can see quite clearly in those months between November 2017 and up to about February 2018 how well that financial index performed. You can see there's about a 20% gain over those 3 or 4 months. That was Ramaphoria round 1. Obviously the markets did get a little bit ahead of themselves at that point in time. Markets looked back and said, hang on a second, we've got this new guy at the helm, but economically and on the ground, things haven't changed. The economy is still weak. There's still major problems. And some reality set in, and you saw the market subside quite significantly, basically back to pre-Ramaphoria levels in the middle of last year. This is the banking index. And again, you saw quite a big uplift during that Ramaphoria phase. And again, the markets did get a little bit overextended, got a bit ahead of themselves, and we saw very much an unwinding of that Ramaphoria from February last year into the 3rd and 4th quarters of last year. But again, things have gradually been picking up. You look at that slide, you can see on the right-hand side of that graph, there is definitely higher lows and higher highs starting to form on that chart, which seems to indicate that there is a level of optimism coming back for the banking sector. And then the retail sector is really where the punishment has been felt over the last year. You can see in that Ramaphoria round 1 scenario, there was a massive uplift in the retail stocks from late 2017 into the early part of 2018. But that unwound spectacularly during 2018, and in fact you can see that index made new lows in March this year. And from a retail perspective, I mean, we've seen some very disappointing earnings results coming out from a number of the retailers. But I do think that we're probably in a situation now where we're at bottom of cycle earnings for a lot of the retailers. The base is now set very low in terms of earnings for a lot of these retail stocks, and there's certainly potential for a recovery in earnings looking forward from these levels, I believe. Then I mentioned to you that foreign investors have largely been vacant from our market, and this slide, which I got from Investec, shows this very, very clearly. It's effectively monthly flows from a foreign investment perspective into and out of the JSE. And what you can see is that effectively from late 2015, effectively after Nenegate, you've seen that foreign investors have consistently been sellers of our market. The only time they were buyers was during that period in late 2017 into early 2018, which was Ramaphoria round one. And you saw in the charts that I showed you a moment ago, in the financial sector, the banking sector, and the retail sector, what that did for the market. So if we do end up with some sort of a situation now where the markets get the certainty that they want, there's some room for investor confidence to return, there's some room for foreign money to come back into our market, and not only that, cash that's sitting on the sidelines in South Africa is at quite high levels as well. So if you start to see flows back into our market, it would likely flow into the domestic sectors of the market. And if you get a situation like we saw briefly in late 2017 and early 2018, where you see some foreign money coming back into our market, that could very well set the stage for a Ramaphoria round two type of scenario. So to that extent, where do you want to potentially be positioning yourself if my scenario is right and if everything I'm painting it turns out to be correct? You really want to look at the stocks where the foreigners typically flock to when they come and they invest in the South African market. So you want to be looking at large cap domestic stocks which are exposed specifically to South Africa. So I've picked 5 of these stocks, and there's more, but I'm picking 5 which fit the bill of stocks that the foreigners would typically look to own if they want exposure to South Africa domestically, and also stocks that are showing the best relative strength from a technical perspective. So the first one here is FirstRand. In the banking sector, this is, other than Capitec, this is right now the stock that probably looks the strongest on a relative basis. You can see that the stock is coiling into the apex of a triangle type pattern over there. If we start to see FirstRand breaking up above 70 Rand, I think that would be quite a bullish outcome, and you would most likely see the stock moving back to its prior highs that we saw in early 2018 and quite possibly move on to new highs, I believe. So I think this is a chart that is really looking poised for a potential breakout, and a positive election outcome next week would give it the catalyst to break out to the upside. The second one is Sunlamp, also a stock that the foreigners typically would look to own when they're wanting exposure to the South African domestic part of the market. Again, you can see there has broadly been a rising trend since 2016. It continues to make higher lows throughout. If it can get up above 80 Rand per share, I think that would be a technically bullish outcome. And I think in a Ramaphoria round 2 type of scenario, you could quite feasibly see the stock moving back to 90 and even 100 Rand if the foreign money starts to flow into our market. Foschini Group is one of the retailers in our market that looks better from a technical perspective than any of the others, and that's why this is one of the ones that I've chosen. You can see that this stock has already begun to break to the upside from a technical perspective. The move here above about 180 Rand is bullish, and I think that sets the stage for potential further gains, particularly if we do start to see some foreign money beginning to flow back into our market. Then Clicks. Clicks is very defensive in its nature. It's also not only defensive, but it's also growing its earnings quite nicely. And it's one of the retail stocks that has not suffered nearly as badly as a number of the other retailers in our market, and you can see that quite clearly there. Clicks is on the cusp of breaking out as well. if this stock starts to move above 200 Rand per share, that would be a very technically bullish break, and I think you would then see it moving on probably to retest the prior highs that we saw in the middle of last year, and most likely go on to new highs beyond that level. This one looks quite promising, I think. And then the last one is Bidvest. Again, it's already begun to make a bullish technical break. The move above 215 Rand per share there has begun to take out that flat overhead resistance line that you can see on the chart. And I think that in itself already sets the stage for further gains for Bidvest, which would probably see it moving up towards 250 Rand, which is where the prior highs were set in early 2018. So those are just 5 stocks. Of course, there are many others. UBS, like I said, mentioned 20 stocks in their report. Some of these ones were amongst the 20 that they picked. But I think these are the ones that look pretty promising to me from a relative strength perspective and from a technical perspective. So that's the way I see it. Obviously, I'll know on the 9th of May whether I'm right or wrong. But that's the scenario as I'm painting it, and I think what the financial markets are looking for and where I see the potential opportunities in how the market would respond. And with that, the big screen at the top there is just lit up, said time's up. So I've finished exactly on time. The organizers will be pleased with that, I'm sure. That's it from me. So thank you very much for your time. Thanks for attending today.